Welcome to our video on navigating opportunities in the U.S. energy sector. The energy sector is a crucial part of the U.S. economy, and it has faced a number of challenges in recent years. However, there are also some compelling opportunities for investors who are willing to take a long-term view. In this video, we will discuss the different investment options available to investors, and we will recommend 3 ETFs that we believe offer attractive dividend yields and potential for growth. The U.S. energy sector, a cornerstone of the nation's economy, has demonstrated resilience amidst a backdrop of volatile commodity prices, regulatory uncertainties, and the growing adoption of renewable energy sources. For discerning investors, these challenges present compelling opportunities to identify dividend-driven value within the sector. This article delves into the current landscape and highlights 3 exchange-traded funds (ETFs) that offer diversified exposure to the U.S. energy sector, catering to those seeking consistent income streams and potential capital appreciation. A tapestry of energy investment options. The U.S. energy sector encompasses a diverse array of companies, spanning from exploration and production giants to refining and marketing firms, energy service providers, and more. This multifaceted landscape offers a wealth of investment opportunities, tailored to varying risk tolerances and investment objectives. Whether seeking stability through exposure to established large-cap energy stalwarts or diversification across the entire energy value chain, investors can find suitable options within the sector. Diversification, the cornerstone of effective energy investing. Investing in the energy sector necessitates a well-structured approach to diversification. Individual companies and industry segments can experience periods of underperformance, making diversification across various energy subsectors and asset classes essential for managing risk and enhancing overall portfolio stability. By spreading investments across a range of companies with diverse business models and exposure to different energy markets, investors can mitigate the impact of downturns in a particular segment or industry. ETFs, efficient vehicles for diversified energy portfolios. Exchange-traded funds (ETFs) emerge as efficient and cost-effective vehicles for accessing the U.S. energy sector. These passively managed funds track a specific market index or basket of stocks, providing investors broad diversification without the complexities of managing individual holdings. ETFs offer investors a convenient and transparent way to gain exposure to the energy sector while minimizing the risk of stock-picking errors. Energy Select Sector SPDR Fund, XLE, a versatile dividend play with a proven track record. The Energy Select Sector SPDR Fund, XLE, commonly known as XLE, is one of the largest and most widely traded energy sector ETFs. It seeks to provide investment results that correspond to the performance of the Energy Select Sector Index, a benchmark that tracks the performance of 24 of the largest publicly traded energy companies in the United States. XLE's diversified portfolio includes major oil and gas producers, refiners, and energy service providers, offering investors exposure to the core of the U.S. energy sector. A notable feature of XLE is its strong commitment to consistent dividend payouts. The ETF has consistently increased its dividend payments for over 40 years, making it an attractive option for investors seeking a steady stream of income. With a current dividend yield of around 3.5%, XLE provides investors with a reliable source of passive income. Vanguard Energy ETF, VDE, a cost-effective approach with broader diversification. For investors seeking a more cost-effective diversification strategy, the Vanguard Energy ETF, VDE, presents a compelling option. VDE tracks the MSCI US Investable Market Energy 2550 Index, which includes a broader range of energy companies, from small-cap producers to integrated oil and gas giants. This wider diversification helps mitigate company-specific risks and exposes investors to the potential for growth across various segments of the energy sector. DDE's key advantage lies in its modest expense ratio, allowing investors to maximize their returns while minimizing fees. With an expense ratio of just 0.1%, DDE offers investors an efficient way to gain broad exposure to the U.S. energy sector at a low cost. iShares U.S. Energy ETF, IYE, a balanced portfolio for value-oriented investors. The iShares U.S. Energy ETF, IYE, provides a well-balanced portfolio of energy companies engaged in exploration, production, and distribution. It tracks the Dow Jones U.S. Oil and Gas Index, offering exposure to the entire energy value chain. IYE's diverse holdings, encompassing integrated oil and gas companies, refining and marketing firms, and oil field services providers, mitigate risks associated with concentration in a specific industry segment. This diversified strategy aligns with value-oriented investors seeking steady dividend income and potential capital appreciation. With a dividend yield of over 4%, IYE offers a higher dividend yield compared to XLE and VDE, making it an attractive option for investors seeking higher income potential. Conclusion: navigating the energy landscape with confidence. The U.S. energy sector's diverse nature and resilience present compelling opportunities for dividend-driven value investing. By adopting a diversified approach through ETFs like XLE, VDE, and IYE, investors can mitigate risks and enhance their chances of achieving their investment goals. While the energy sector's future is uncertain, its inherent demand and the steady growth of emerging energy technologies suggest that patient investors can reap rewards from allocating a portion of their portfolio to this sector. The U.S. energy sector is a volatile market, but it also offers the potential for high returns. By investing in a diversified portfolio of ETFs, investors can mitigate risks and increase their chances of success. We recommend that investors carefully consider their goals and risk tolerance before investing in any energy ETF. Thank you for watching.